Welcome back to my channel. My name's Sarah Irons. I'm a commercial finance broker and mortgage broker of 17 years. At the moment I am specialising in commercial finance, so that's bridging both regulated and unregulated, commercial term loans, owner-occupied and commercial investment, and development finance. If you're unsure how those work or what they even are, then this is definitely the place for you. Or knowledge is power, I normally say, and that is exactly what I'm here to do, to offer my knowledge to you for free to help you on your way. Which in turn helps your broker, so in turn helps me. If somebody comes to me better prepared, then it's a slicker process for me and for them, and we get to the result much quicker. So that's a win for everybody. That's what we're all about here. And yeah, I'm going to talk about the two different ways that commercial finance works, so you have a much better understanding of what's available, what's out there, and maybe you are wanting to embark on your first commercial property. But either which way, I am coming to you with information and tips to help you on your property journey, in the hope that it will be quicker and slicker and less stressful. We are seeing so many new inquiries across all commercial sectors actually, so that's bridging, whether that's regulated or unregulated, commercial, whether that's owner occupied or commercial investment, or development finance. I also do a lot of self-build. But today I'm just going to home in on commercial finance for you and just really explain what that's all about. I'm going to try and keep it brief and just full of information for you. So first of all, what is commercial finance? Okay, so basically it's like a mortgage over a set term that you pay for each month, but it's for a commercial property. And there's two ways that you can have a commercial mortgage. One is owner occupied. This means if it's your own business that's going to be in that commercial property, then this is a commercial owner occupied term loan. That basically means that your own accounts of the business are actually going to be paying that mortgage, and therefore the loan will be determined based on your own personal profits, so as in the business profits. So the accounts of the business is what is going to be assessed to determine the loan size. Now, if you're a startup or a new business, they're going to ask for the last company that's in their accounts. If it's a company that is in there at the moment and it's not vacant, what's the reason that they're selling? Are they retiring? Are you sort of taking over a business that's up and running and a going concern? Do you have a business plan as to how you're going to keep the profits the same or maybe expand? Are you going to keep staff or lose staff? Are you going to have a management team? Do you have experience? Have you run this type of business before? Really, really crucial when it comes to owner occupied. So they are all the things they're going to be asking. Now, when it comes to accounts, we all know for mortgage purposes, accounts can be difficult. When you are doing your accounts, everybody puts through their expenses to try and reduce their tax bill in simple terms. However, when it comes to commercial finance, it's the one time the lenders really are on your side, it seems, and they're using a calculation called EBITDA, which stands for earnings before interest, depreciation and amortization. So that basically will add back in any one-off costs that you may have spent that year, which was tax deductible. For example, if you bought a vehicle or machinery for your business, or had a one-off cost that isn't normally there that reduces your tax bill, the lender will actually add that back in and it will show as profit. So they will be looking at your accounts in the best possible light, which is brilliant for you. And obviously that will then show a higher profit, and therefore a higher loan will be available to you if it fits within the loan to value of the deal, and obviously if that's what you're looking for. So that's great. So that's how commercial owner occupied term loan is assessed. The other thing they're going to look for if you are a startup is, do you have any cash reserves? Do you have any savings? How are you going to pay the mortgage until this business is up and running? What's your CV? What's your experience in this industry? What's the competition in the area? Are there other people doing the same thing as you? Is that going to reduce the potential profits and excitement for your new business? The lender at the moment will really research and assess your business and the property you're going into as if it was their own business, which can seem tough when you're the client and you're just really desperate for the funds so that you can carry on. But actually you're getting a double whammy here of research and due diligence. So actually, you know, if the lender is happy with it, then as a client, obviously you've done your own research, but you've sort of got that satisfaction and safety net almost that the lender also thinks it's a positive venture. So don't be disheartened by their extra due diligence. Sometimes at the moment this market's very turbulent, and lenders have been spooked by what's happened, and they are slowly coming back to the market, lowering loan to values and lowering rates, but there's still some extra caution at the moment that we're seeing. But you know, we do understand it. Normally it's very easy to answer and overcome, but yeah, don't be alarmed if there's sort of extra questions that maybe you wouldn't have seen if you'd applied for this commercial mortgage a couple of years ago. Most of the time owner occupied would be on repayment, anything from 10 years to 30 years depending on the lender and the structure of your company, so that's something that your broker will discuss with you. You can have interest only, and often if you're a startup and you need a bit of time to maybe do a fit out of the store, they will give you some leeway, maybe give you a year, 6 months or a year interest only, and then it will swap over to full repayment. So those sort of terms are on a case by case basis, but it is something that could be available. On the whole, they are looking at repayment mortgage for you. The second type of commercial term loan is commercial investment. This is basically the equivalent of a buy-to-let, but with a commercial property. So for example, you want to purchase a property and then you're going to rent it out to somebody or another business, and you would have a lease, a commercial lease in place. There'd usually be a break clause, which means that both parties can exit that lease. The lease is typically 15 years to 25 years, some are shorter, but most lenders would like to see at least 10 years on a lease. If it doesn't have that, don't worry, every lender is different, and it is still sort of old-fashioned underwriting in the sense that they will look at everything on a case-by-case basis, and it is more guidelines and criteria. So yeah, don't be alarmed if you only can get a 5-year lease. That's not a complete no-no when it comes to finance, but the longer the lease, the better, and the more security the lender has. They will also look at the tenant. What tenant have you got going in? Is it somebody really well known like Costa, or is it a startup business themselves, or a one-man band, or yeah, so they will be sort of looking at what tenant you have lined up to go in. And if it's just a vacant property and there's no tenant, obviously it will have a sector categorisation, so we will know whether it's going to be likely to be a cafe or an office, for example. So yeah, depending on the categorisation will depend on the loan to value and the lender again, and their attitude to risk. So if it's vacant, they will know what type of tenant will be going in there. They'll be able to therefore gauge the sort of rental expectation that you can achieve in that property. It will also be valued in the normal way. The valuer will also put his valuation for an annual rental achievement in there as well, but they are going to be looking at this property on vacant possession value, so empty. I'm not going to go into values and how you can up the values of commercial property on this video. That is a bit more complex, but depending on your tenant, will depend on the type of valuation that you can get, and yeah, the stronger the tenant, there is some scope to add value, but I'm going to cover that in another video. For now, I just want to explain the differences in the type of commercial finance you can get and how it works, whether it's your own business or whether you want to rent it to another business. So that's the two options there. The other thing about commercial investment term loans is that usually you can have interest only. It's very similar to sort of the buy-to-let market when it comes to normal properties. So yeah, owner occupied is normally repayment, and commercial investment is normally interest only. Okay, so going direct to the bank versus using a broker when it comes to commercial finance. The advantage of doing that is if you go to the bank that your business banks with, then they can see how your business runs. They can see the income and expenses that go in and out of your account. You've already got a relationship with them, so that can be a positive. That being said, we can also go direct to your bank for you. We will always ask who it is that you bank with, and so as a broker, however, we speak to different people. We aren't going to sort of your bank manager that you would see when you walk through the door, albeit you might have a good relationship with them. They do have different targets, so sometimes a broker can have a more positive impact when you go direct to even your own bank. Just we're talking to somebody potentially higher up than who you're talking to in branch. That's not always the case, so I don't want to speak out of turn, but just from my experience, I feel the volume that a brokerage gives a bank direct and the direct contact with the people that we speak to as a broker instead of the people that you would speak to can sometimes hold a lot of weight. So for example, I've had people that bank with a certain bank, they've gone direct, they've been told no, they've come to a broker, maybe not mentioned that they've already been to that bank, but we've spoken to the bank and we've got a positive outcome. So it's just sometimes the people that you speak to, the way you pitch an inquiry, we maybe can give more information than that client has offered. And yeah, sometimes we just get a more positive result. So at the moment, with the market being so turbulent, there's never been a more important time, I believe, to have a broker on your side. I always felt that using a broker is better than going direct for so many reasons, which I'm not going to go into now. But yeah, I would say the overall advantage is if you're speaking to the people you bank with for your business, they will already know what's going in and out of your account, and you might have a good relationship with them already, and it's definitely a good place to start. Some lenders actually prefer a broker to package the deal. It means that they don't have to then get involved in the compliance of suitability letters. It means that their time's better spent on new inquiries. So yeah, often they will prefer a broker to be the one that introduces the business rather than dealing direct with the client. A broker's also whole of market usually, or we certainly are, so we're not limiting your lenders, whereas if you're just going to your own bank or one bank direct, you don't really know what their criteria is, what they might have appetite for. A lot of banks have lost appetite for retail, for example, so instead of wasting your time going through hours of interviews and paperwork just to be told no, if you come direct to a broker, they will know the lenders that have an appetite for retail. They'll know the loan to values if you need a high one. You know, whatever your own circumstances are, a broker is best placed to quickly identify the right lender for you, which is going to save you so much time, money and credit checks. So yeah, I believe it's well worth having a broker on your side. So in summary, it's faster to use a broker. You could potentially get an exclusive product, so the rate could be better, and just generally more chance of success. So yeah, I think we're definitely somebody to have in your power team. How big is this market? How many lenders are there? Well, there's certainly the inquiries. At the moment, we're seeing a lot of inquiries for both owner-occupied and commercial investments. That's good. We also see commercial being changed to residential, but that's sort of toppling over there on the refurb and bridging side of things, which we're not covering in today's video. But if that's something you're interested in, stay tuned. I will do another video on that shortly. So obviously we've had COVID, we've had Brexit, we've had regulation changes in the market, a turbulent market, the mini budget. Lenders reduced to about 7, so not very many at all in this sort of category of commercial finance. There are a few more now. However, compared to the other sectors like bridging and residential and buy-to-let, there is very few lenders in this market. Why not to use 2 brokers when you're trying to find commercial finance? Okay, so as a client, as a customer, I totally understand that you want to do, you might not know the broker very well, you want to do your own research, you might think that it's safer to try 2 brokers and then compare what they both get and sort of hedge your bets and then have a better feel for what you want to do, because obviously you want to get the best product for yourself. I totally understand that. However, most brokers can see the same lenders, and because there's not very many commercial finance lenders out there, be very careful when you're using 2 brokers. Mainly because if a lender, it is a very small world in the commercial finance world, if a lender sees the same application on their desk by 2 different brokers, they get spooked straight away. They think, why? Why are there 2 different brokers? Is there a problem? Did one broker not want to work on it for any reason? Did it not go through with them? And if not, why? They just get a little bit spooked as to why there's more than one broker working on it. So it doesn't show your inquiry in the best light. So yeah, that I would normally ask if there's another broker working on a case when I get a new inquiry, mainly because I don't want to disadvantage the client. I obviously don't want to do double the work either. If there's another broker on it, we are very likely to see the same products and have similar ideas. So although I understand it, that you should be aware when it comes to commercial finance that it is a small world and you should stick with a broker and trust your broker to do a good job for you. And hopefully you'll have great success with the one you've chosen. Valuations. So valuations on commercial properties are different to a normal residential or buy-to-let. You can have a short form or a long form or red book valuation. They are much more in depth than a normal regulated residential or even small buy-to-let valuation. So they're a commercial valuation long form, which means they're more expensive and they're more in depth. The other good thing about commercial finance in general is it can be a lot more flexible than mainstream residential and buy-to-let. For example, you could have a portfolio lend where you just have one loan across maybe 13 properties. They can also consider cross charges. So for example, if you didn't have enough equity in one property, they could maybe bring in another property that you own and just do a cross charge. So it's still one loan, but they've got two securities under one mortgage. That happens all the time when it comes to commercial finance, and it means you can leverage your equity in a much easier way without having to actually go through a whole refinance, draw out money for a deposit or something like that. So yeah, we see that a lot. So in summary, commercial term loan finance is something we do a lot of. We use all the lenders, as I said. Actually love this sector of work. I find it really interesting, and it's great to see that the inquiries are still coming in given the market turbulence. If you do have any other questions or something that you'd like re-explained or something you feel I haven't covered, please do drop a note in the comments box. I'd be happy to help. And obviously if there's any videos you specifically would like to see, let me know. I'm happy to do those as well. I am aiming to have at least one video a month coming out to you. I'd love to increase it, but I don't want to overpromise and underdeliver, as I have done in the past when it comes to social media and videos. But hopefully that gave you a bit of an insight into the two different ways that things can be done. And of course, any brokers, mortgage brokers and buy-to-let brokers that haven't embarked on commercial but would like to, I'm more than happy to discuss referrals, introductions, and speak to you about how maybe you could also include some commercial finance into your own business. If this has been useful, give me a big thumbs up and subscribe if you're watching this on YouTube, and I hope to see you again soon. Bye.